Hey, what's going on, guys? Mic check. Can you hear me? Great, great. How you guys doing today? Good deal. Well, I got a little bit of a presentation for you. Shouldn't take too long. I would just suspect an hour or less. I'm going to run through a little bit of a PowerPoint here, just discussing the pivot points. We'll look at some specific examples and all that good stuff. And then, of course, we'll do some question and answers. If you guys have any questions throughout the webinar, feel free to ask them here in the chat. Let's try to keep all the questions here in the YouTube chat. That way I can keep up with everything versus Discord, so I don't have to bounce back and forth. If you have any notes you want to take down during the webinar, feel free to do that. And then just, I'll be happy to go over all those questions, like I said, especially toward the end of the video. So thanks. I appreciate it. Yeah, I moved my office into a spare bedroom in the house. So finally got a little bit of my own space and was able to add some stuff in the background and all that good stuff. So we'll go ahead and get started. The video will be available on YouTube, of course, after this. So if you weren't able to make it live, you can watch it, of course, after the fact. And yeah, so let me go ahead and get everything set up. All right, so obviously just a standard disclaimer here. Trading is risky. Do it at your own risk and all that standard stuff. So feel free to read through that. We're just going to skip on to the next slide. So basically what to expect from this webinar. We're going to go over a technical explanation of what the pivot point indicator is. And then we want to talk about very briefly why it works, basically how it's tied to emotions, how emotions are translated on charts. We're also going to talk about just a couple of the pros and cons of this specific indicator. I've got a few examples as well for strategies that you could look at possibly implementing using the pivot point indicator. And I have a few examples of live price action from a video that we'll be able to look at and how the price actually interacts with this indicator. And sorry, let me actually turn off the webcam for you guys there so we're not blocking the screen. And then finally, we're just going to run over very quickly how to insert the indicator on the three most popular charting platforms that everyone pretty much uses, either eSignal, Thinkorswim, and TC2000. All right, so just starting out, what is a pivot point? When we're talking about a pivot point in itself, not necessarily the indicator, you can think of a pivot point is like a swing in the direction of the price. So for example, in this chart here, you can see that obviously we hit a high price here where this is like you could call like a swing high. So the price, the trend was moving higher, and then you have, after this trend higher, sellers were able to gain control. In other words, the buyers just got exhausted, and there were simply more sellers up at that price level, and they were able to move the price down. So you have essentially a change in the trend. And so if you kind of analyze the word pivot itself, it is simply a pivot in the price movement. Okay, so that's the most basic of terms of what a pivot point is. You might hear people talk about support and resistance. You might even hear me talk about, there's a pivot at this level, and I might not necessarily be referring to the pivot point study itself. You can also be referring to the most basic of technical analysis, and that is just support and resistance and determining where a pivot point specifically is. But there is a difference when we're talking about the pivot point indicator itself. So the way that it's actually calculated is you have the pivot point is essentially the average of the high, low, and closing prices from the previous trading day. So it's basically derived from your daily chart. Now, there are other time frames that you can use. I believe like a weekly and a monthly. But what we're going to be discussing is essentially the pivot point that is calculated from the daily chart, and it's going to be looking at the previous day's high, low, and closing prices. And we're not going to get into the specifics of the formula. There, you could totally geek out on the formula if you want. You can go to Investopedia and look at that if you really want to. I just want to try to keep it as simple as possible. We don't really need to do the mathematical formula ourselves because it is obviously calculated for us by these charting platforms. But essentially what this does is, like I said, it's going to calculate what they are calling the pivot point on the subsequent day. So if we go over, you see that the subsequent trading day, if you see price that is essentially trading above that calculated pivot point, then it could indicate ongoing bullish sentiment, where if it's trading below the pivot point, it could indicate ongoing bearish sentiment. So the pivot point is the basis for this specific indicator, but it does also include other support and resistance levels, and they're projected based on that pivot point calculation. So these typically include several different support and resistance levels. Usually most charting platforms have about 4. I believe Thinkorswim only displays 3 of them, if I'm not mistaken, but they're usually referred to as S1, S2, R1, R2, and these are basically just support 1, support 2, resistance 1, resistance 2, etc. And if we actually look at this this picture here that I have of Apple's chart, you can see that the pivot point is actually here. Okay, so this in my chart, the way that I have it set up, the pivot point calculated from this day here, right? This was the previous trading day. So on this trading day, the pivot point was calculated to be here. And above it, we have resistance 1, resistance 2, and out of the frame, there are more resistance levels above that, 2 more. And then below us, we have support 1, and below us, out of the frame, you have support 2, support 3, etc. And those are all, again, calculated off of that specific pivot point on the day. Let me just look at your questions in a little bit. Let me get through the PowerPoint, and then I'll be happy to address your questions. So moving on to the next slide. So support 1 and resistance, or support 1 and 2 and resistance 1 and 2, they may cause reversals, but they could also be used to confirm the trend. And in fact, we're going to look at a specific example of a strategy of what you could use when you see price coming into a support level 2 or a resistance level 2 from that pivot point study. So why do pivots work? Well, the most basic of technical analysis, of course, we know looks at a candlestick chart. It was actually in the 1700s that the Japanese discovered rice markets were influenced by the emotions of traders. So a candlestick shows emotion by visually representing the size of price moves with different colors. A lot of this we pretty much know, but the reason I'm kind of going over this is because we need to really think about these candlestick charts as truly emotions of traders and not just inanimate objects, if you will, on a chart, right? These candlesticks are actually representing where you have sellers and buyers that are meeting and one takes control over the other, and you can kind of get an idea of the sentiment and possible price movement based on those emotions of those traders. You can see where people kind of bought high, if you will, and then they get trapped up there and the price, completely reverses on them. And so you can see how their emotions would be peaked because they kind of bought the top, if you will. So we need to think about these candlestick charts as truly emotions of traders. So regular occurring patterns, they can basically help us forecast the short-term direction of price. And although we are trying to think of these candlestick charts as the emotions of traders, we know that, especially in these large cap stocks that we trade, that, institutions and algos trade them very, very heavily. You could say algos, of course, they don't have emotions, they're computers, but they basically trade off of the same emotions that humans do. So that's why these stocks do what they do. So the sooner that we, again, can think about these candlestick charts as emotions, as traders' emotions, the better trader essentially will become. And the reason that the pivot points work is because of that, because of how these emotions dictate the movement of these stocks. So what are some pros and cons of this specific pivot point study? The pros are, that they are essentially based on daily support and resistance levels, which of course is the strongest form of technical analysis. There's a lot of different forms of technical analysis. We talk about horizontal support and resistance, which is really what I'm referring to. You could be a previous day's high, a previous day's low. Then you've got trend lines. There's a lot of different ones, but I would say that the strongest form of technical analysis is basically that horizontal support and resistance, where you find that sellers overtook the buyers. The buyers were exhausted and the sellers took control, and you have that swing high. Same thing in inverse, where the sellers are exhausted, the buyers take control, and you have that swing low, and that creates essentially these areas of support and resistance where you can kind of predict that the stock will either bounce or reverse off of at some point in the future. So it's basically, since it is based off of that, again, the way that it is calculated, in my opinion, really kind of gives it a lot of emphasis in terms of how well it does in fact work. The other thing that's good about it is that it is a static indicator. So unlike a moving average or your VWAP that are constantly moving throughout the day, this is pre-calculated from the previous day, so it does not move at all during the entire trading day. So essentially, you can think of it like the same difference as if you put a support or resistance line drawing on your chart. It's not going to move unless you move it. So it's kind of nice in that regard because it is a static indicator. The other nice thing is that it is very useful for measuring potential price movement. So you can essentially, the way I essentially look at these is, where a stock is likely to go, where are potential target zones or potential entry zones if I'm looking for maybe a reversal trade. So, it's just very, very straightforward in terms of seeing, where a stock could potentially go. What is that measured potential, if you will? And lastly, I would say that it's really easy to interpret the daily sentiment because, like we said, if a stock is trading above the pivot point, it's typically thought to be bullish. Kind of similar to, you might hear trading above the VWAP is thought to be bullish, trading below is bearish. Very similar in that regard. So some cons is that the pivot point itself and the corresponding support and resistance levels are not actually equal on all of the platforms. They're fairly close, but there are some discrepancies between, for example, where eSignal displays the pivot point on the day versus TC2000 versus Thinkorswim. So, when we're talking about trading large cap stocks, we're not overly concerned about a few pennies here or there, but sometimes there are some discrepancies that that personally I haven't been able to explain. I have found that eSignal is probably the most accurate, but I'm able to trade just fine using pivot points on both Thinkorswim and TC2000. Another con is that on large gap days, the pivot points are basically rendered very far away. And the reason is because if you have a large gap that occurred overnight or in pre-market, then the pivot point that is calculated from the previous trading day is going to be a long ways away from where the price action is actually opening up. So it basically means that the price action is probably not going to be anywhere near any of the pivot point or support or resistance levels for you to really utilize the indicator. And then, of course, just like any other indicator, it's not a holy grail. It's not something that you can depend on by itself. It is meant to be a tool to help you in your decision making and trading. So just go over a couple of the strategies that you could implement using the pivot point indicator. And the first and most obvious one is the common saying, the trend is your friend. So essentially looking to join a trend. In this particular example, I believe this was Apple, but it doesn't matter. We can see on this 5-minute chart that the pivot point is actually this black dashed line indicated here. Okay, and so this is right at the open. And what ends up happening is the stock rips up into the first resistance level from the pivot point study. And by chance, there also happens to be the previous high of day sitting right there. So you kind of have two levels. You have an actual daily level, a previous high of day, that is lining up perfectly with the first resistance level from the pivot point study. So in a case like this, when you have a stock that starts the day out looking strong, it starts to establish a very clear, strong trend to the upside. You essentially want to look for a good point to join the trend, if you will. And this was a great example of how you could do that. You see that the stock essentially trades right into that first resistance level and then rejects. And then it comes back up and it moves above that resistance level, and it just kind of consolidates and holds up right there above it. And what it does is it comes down and tests numerous times that first resistance level, now acting as support. You've got your previous high of day, and you also have rising support in terms of that 20-period moving average sitting right there, where an explosive move developed off of. So on a case like this, essentially what we are looking for is a strong trend in one direction and then a pullback into either the resistance 1 level or the support 1 level if you're going to short, in order to join that trend. And ideally, you want that level to sort of line up with other levels to give you even more conviction in the trade. So this was a really high probability trade because of the fact that you had this clear established trend right off of the open, and then you have that pullback into the R1 now acting as support, a previous day high now acting as support, and rising support with that 20-period moving average. So again, a very high conviction trade that gives you really good risk reward. So this is a great example of how you could join an existing trend. So another strategy is to look for a pivot point reclaim. And this isn't the perfect example, but it gives you an idea of what you could potentially be looking for. So again, we see that on this stock, I believe this was Disney, off of the open, it dumps down below the pivot point. We have our pivot point marked right here, and it dumps below it. It comes up and essentially back tests the pivot point and your moving averages and starts to fail, comes back down. It actually puts in a new low here, and then it rips all the way back up over the pivot point. And then the next candle is not really ideal. You wouldn't want to see such an aggressive candle following that. You'd want to see kind of like a pullback to hold it as support as a more conviction trade, but this is still a good idea of what it means when you see that something breaks below the pivot point. It tries to continue lower, but it just simply does not have the momentum to continue. Essentially, the price fails to continue. And so you're watching for a reclaim of that pivot point. And so what we see that it does reclaim the pivot point, and it holds it numerous times. You have 3 5-minute candles where it comes down and keeps testing and testing and testing, and every single time it gets bought up off of the pivot point. You have this 3 buyers candles in a row that probably gives you a good idea that it's obviously going to hold the pivot point and it's looking to make a move higher. So you're essentially looking for something that tries to move below the pivot point, but it can't do it. There's just not enough sellers. The buyers take back control of it. They move it back over the pivot point. That's your entry point. That is where you're essentially risking off of right there. You see it holds the pivot. You get in for the trade, and where does it go? Your first target is going to be that first resistance level right there, and you would have easily gotten that fill right there. So it's a good idea, kind of like a look below and fail, if you will. Like I said, anytime you see something that tries to break a key support level and it immediately reclaims it, that generally gives you a good indication that it's probably not going to work, and it's going to reverse from there. So another strategy is buying dips. And so this is really more of a scalping strategy. This is something that I'm kind of, I would say, my bread and butter, something that I'm particularly good at. You could almost call it like counter trend trading, because essentially I'm capitalizing on an overextended move. So what we're looking for is we're looking for that extreme extension into the pivot point. It could also be into a pivot point support level or a resistance level, but especially the pivot point. I would put a lot more weight in the pivot point itself. But it is definitely a tradable strategy. But again, the key here for the best edge is that we have to have that speed and distance. And really, got to underline that. I mean, that speed and distance is really, really key if we're going to be buying something into a level. We can't, we can't be buying something into a level without that confirmation. Otherwise, we have to have the speed and distance for that edge. So if we have the pivot point lining up with some other type of support resistance level, and we have some type of moving average perhaps sitting there, then that's going to give us even more conviction and possibly buying something into the level. So the idea of dip buying is, again, you are buying without confirmation. So we see that we get a dip down into the pivot point right here, and we can see this clear extension coming down, right? This is very clearly extended. This is a 2-minute chart, by the way. So you can see how extended we are away from the 5 EMA here and the 9 EMA right there. That's very, very extended. So the probability of there being some type of snapback rally is particularly high. And when we're talking about trading options, especially when you can take advantage of that premium crush, whenever you get a huge move lower like this, obviously we'd be looking at buying calls. When you can take advantage of that premium just absolutely getting crushed on that volatility coming down, you get really, really, really great fills, because it's essentially going through price discovery. As the stock is really falling down with volatility, those option contracts are essentially going through very rapid price discovery. And so essentially the buyers of those contracts, they just completely fall off to very, very low levels. And so that causes the option premium to just completely collapse. All right. And so that's how we're able to really get great returns scalping options on a kind of counter trend trade like this. Again, though, I must emphasize, with a trade like this, it is very essential that you have that speed and distance, because if you're just buying something because it's coming into the pivot point, it's probably not going to work without at least waiting for confirmation that it's going to hold that pivot point. So this is basically what you could call a dip buy, and how you could utilize the pivot point to exercise something like a dip buy. The last one is looking for reversal points. So in this particular example, we can see that on Apple's 5-minute chart, it actually opens up above the pivot point. So our pivot point in the day is down here, and our first resistance level is here. R1 is sitting here. So it opens up right underneath of R1 and essentially immediately rejects and starts to move lower. All right. And so what it essentially does here is it comes right into the pivot point. It fails and trades kind of up and over the pivot point, clearly struggling, clearly trying to reject it. And in fact, it does. It makes a move down here lower. And where it comes down into is the second support level right here. So here's your first support level, if it's a little bit hard to see on the video. So there's your first support level, and here's your second support level. And it does overshoot it, and that's not uncommon, especially on these large cap stocks. They will overshoot levels, especially when you have a lot of volatility. Okay, so it doesn't necessarily mean that the level's going to go, but when you have, again, a very similar trade like this, where you have that speed and distance, you're right, you have how many red candles down is that? It's clearly made a decent size run down into that key support level. The odds favor that it's going to reverse, and the R2 and the S2 levels tend to be pretty heavily weighted from what I have seen in my back testing. So when you get a decent size move away from the pivot point, especially with speed and distance, that goes all the way to your R2 or your S2 level, that is really a kind of a prime spot for a potential reversal zone. So you can kind of look at that as a potential place to look for a reversal. And ideally, the stock has traded its average true range by the time it reaches that R2 or S2. And once again, it is a huge bonus if you can get it to match with other, confluence of support or resistance. Maybe you have some type of moving average there, a daily level, something, something besides just that one level. It's going to give you even more conviction in the trade potentially working. So let me just look at your questions real quick here before we move on. So Dollar Bill had asked, does it include pre and post market action? No, it's calculated off of regular trading hours from the previous day. So good question, but no, to my knowledge, it's just calculated off of regular trading hours. Okay, so what I'm going to do now, let me open up, I have a video here for you guys. Make sure this is coming through for you. All right, so this is 3 different examples of some live price action we can take a look at here. This is NVIDIA, and what we're seeing here is obviously it's relatively close to the open. NVIDIA has essentially traded up into its previous high day, and it's looking to make a move higher. You can see that it's had a couple of days of consolidation here, and it looks like it's about to have a range expansion and make a move higher. And what we're looking for is how does it react when it moves up into those pivot resistance levels. So let's see, the pivot point, it is a little hard to see, but the pivot point is right here. All right, so essentially it traded right into the pivot point, a little bit below it off the open, and then ripped. And where is it coming to now? You can see it's coming right into the R1 level. You can see it here on your 1-minute chart as well. And look how perfectly it rejected immediately right off of that level. Okay, so it's really nice to see how these stocks very clearly interact with these pivot points. So essentially, if you were looking for playing like a breakout trade, if you were looking at playing this this range expansion of range breakout here, when it breaks out and tests this pivot point, you could buy this pullback here, or you could wait for the next 5-minute candle to make a new high. So we have a new 5-minute candle here that's just opened. So I'd be watching this. If we see that this 5-minute candle breaks up and makes a new high with momentum and volume being very, very key, then that would be a technical breakout trade. And at that point, we'd be targeting the next resistance level since we've already tagged the R1 level. I believe this was a trade that I took, and I actually waited for the flag break here. Boom, right there. Right? So when we see that momentum, look at the volume surging in here, right? We have clear increase in volume. That gives you a good indication that the momentum is going to carry the stock forward. And where is it going to go? Most likely into that next R2 level right there. And we're going to see how NVIDIA actually trades into that. I do have the video sped up, by the way. This is, I think we're looking at this like 2 or 3 times faster than normal. So in real time, things don't happen quite that fast, but in your mind, I assure you, it seems like they do happen that fast. There we go, trading right into R2 perfectly. Look at how beautifully that interacted with the R2 resistance level right there. So that, I believe this, I took this trade, this flag, and I was all out right into the R2 because it is a breakout trade. Breakout trades are not my specialty. I'm in and out very quickly. Now, this is an example of Tesla interacting with the pivot point itself. You can see that it actually opened well above the pivot point, and it is actually pulling back here into the pivot point as we speak. Now, what I marked here, this is the previous day's high. All right. And the reason I marked that is because I want you to see how much emphasis the pivot point really has on these stocks. Okay. So it currently traded right here into the previous day's high, and it's trying to hold it. Okay. It's trying to hold it. It's trying to hold it, but it's actually, boom, it's actually going a little bit lower. And where did it go? Right into the pivot point. And granted, the pivot point was only like a couple of points below the previous day's high, but it traded right into the pivot point. It went through the previous day's high into the pivot point. So you essentially had two levels there. You had the previous day's high and the pivot point stacked up basically within a couple of points on top of each other. And unfortunately, this is set on a 10-minute chart. But ideally, I'd like to see a 5-minute chart here. But you have, a rather quick move lower with that speed and distance into two levels of support, the previous day's high and that pivot point. So you have a high probability scalp trade potentially here. If we see this play out, you can watch the 1-minute chart over on the left side and kind of see how the price action over here develops for a scalp move higher. So clear interaction again with that pivot point. And I would say, knowing Tesla, it loves to retrace, especially you get nervous shorts who very quickly cover their position. So it's not uncommon for Tesla to have these monster retraces almost back up in the high of day and then come all the way back down. So that also gets into kind of knowing the stocks that you trade. Most of you guys know I trade the same basket of stocks every day: Apple, Facebook, Nvidia, etc. And so you know how these stocks trade, you know how they respond to these types of indicators, to these types of levels. And the more you kind of learn that, the better you become at trading these stocks. So I believe we'll just see this through here. We're getting the bounce off the pivot point here. And like I said, it makes complete sense for Tesla to at least trade up to here into that pre-market low where it held and ultimately rejected. And that's kind of like a quick counter trend scalp trade that would have been a solid trade right there. I mean, on Tesla, what is that? That's like 10, 20, 30 points at least. 30, yeah, it's just a 30-point trade, 30-point scalp, no big deal. So yeah. Very, very clear interaction. And plus, I forgot to mention, as a bonus, you had rising support right there on that hourly chart in terms of the 20 EMA. So this is an example. This is the final example here on Roku. And we can see that Roku, and when we look at the 1-minute chart, Roku moved down, it moved up, it moved down, it actually put in a new low here, and it looks like it's going to fail. So again, we look at our macro picture. This is why the hourly chart is very, very important. What do we have below us? We have the 5 EMA on the daily chart and our S1 lining up right there. And then a little bit lower, you have the previous day's low and your 9 EMA on the daily chart, and even lower, you have S2. All right, and so we talked about S2 and R2, that second support and that second resistance level, being very, very key levels for a potential reversal trade, because that's a long ways away. If you're looking at trading all the way from the pivot point down to S2 or up to R2, a lot of times the stock might have already traded its average true range by the time it gets there. And if it does, if it's already traded its average true range, then it's high probability that it's probably going to reverse. There's a reason these stocks have an average true range. And so if you know that and you see the price action coming into that S2 or that R2 level, then sometimes it's something that you can capitalize on. So just kind of watch this through just a couple of more minutes here, I believe. We're going to see this volatile wash on Roku down into that S2 level and how it actually responds to that. So you can see it's really trying to hold S1 right now, right there. There's S1 and as well as your 5 EMA on the daily chart. It's trying to hold, but overall it doesn't look good. It looks weak. It looks like the sellers are still in control, and it's not that far away, right? It's only hit S1 so far. So this is where, if you were going to be looking for a scalp trade, you have to be patient. You have to be patient and let this thing trade out. Let it reach that extreme, right? Let it hit that speed and distance. Boom, look at that. Really, really quick. Would have been probably, of course, the video sped up 3 times, so it didn't quite happen that fast. But in real time, you could have caught it, but it's very, very quick and ripped all the way back up. But look at, I mean, dead nuts. I mean, perfect. Right into that S2. Absolutely perfect. Reversed from there. Went higher. So really useful when you look at that pivot point study and how, in particular, these large cap stocks will react with those pivot points. Now, I don't know how well it actually works on small caps. I don't trade small caps, but it might be something worth investigating if that's if that's your niche, if that's something that you wanted to get into. Let me just look at some of the questions you guys have here. Do me a favor, guys. Hit the like button if you haven't already. I appreciate it. Get some more people to see this. Hopefully it helps some more people out. Good. Glad it's helping you guys out. Quick money. Yeah, absolutely, Ariana. Let's see. On the Roku example, what was the previous low level on the hourly chart? Sorry, let me. I don't recall what that was, and let me see if I can pull that back up for you guys. Okay, so the previous low level 151.50 looks like right there. Yeah, the latency on eSignal is definitely really good. But again, remember that the video is sped up like 3 times, I think it is, just for obviously to keep it kind of concise. When we're trading these things in real time, I don't know about you guys, but sometimes it seems like things are just happening like lightning fast. It's like, oh shit, I gotta get in. I'm gonna miss it. But in reality, you have a lot of time. Most of the time, you have plenty of time to spot trades, execute trades. It's just in your mind, things are happening literally as fast as we're seeing it in this video. But the video is sped up 3 times, so it's kind of something to play around with sometimes. But it is entertaining how it seems that way in your head. All right, so let me just show you a couple of examples on charts, and then I'll show you. Actually, you know what? We'll do it this way. Let me show you how to insert the pivot point study on the various platforms, and then we'll just flip through a couple of charts from the last trading day, and then we'll wrap up with some questions and answers. So unfortunately, I don't have TC2000 anymore. I don't have a subscription to it anymore. So I did grab some screenshots from an old video that I had. And basically, it's pretty straightforward. All you're going to do is you're going to go to the top of your TC2000 platform, the chart, and you're looking for this kind of green plus right here. You're going to click on that, and then right here you can start to search. Start typing in just PIV, just like you're going to type in pivot, and it should pull it up right there, pivot points, and you can just select that to add it to your chart. Now, once you do that, it's going to have this kind of window here where you can edit the pivot points, and you'll notice that with TC2000, you have the pivot point itself, and you have 3 resistance levels, and you have 3 support levels, right? With eSignal, you get 4 resistance levels, 4 support levels, and I think Thinkorswim is 3 levels as well. So obviously it's pretty it's up to you as far as how you want to color it. It just made sense to me. Resistance should be red, support should be green, and then the pivot point, if I was using a dark chart, would be white. If I'm using a lighter chart, I like to make it black. I would also say really important for TC2000 and any of the charting platforms, if you have the option to show midpoints, I would recommend you turn that off. What that's going to do is show you the midpoint level between each of the S1, S2, the pivot point, etc. And obviously those levels are not as important, so I don't personally use them, so I can't say how well they would work. I have not back tested them. But I just kind of felt like, it wasn't necessary to have that many lines on my chart. So I'd recommend you uncheck that. And the rest, again, is just personal preference. So it's pretty straightforward. That's how you would add it to your chart on TC2000. Again, I would note that there is some discrepancies between the actual pivot point on TC2000 versus eSignal versus Thinkorswim. They're usually relatively close. I think that if you have pre-market and after-hours data turned off on TC2000, it might actually display the pivot point and the R1 and S1 levels, etc., differently than if you have it turned on. I could be wrong on that, but I think I remember that it did display it differently if you turn off that pre-market and after-hours data. So most of you guys probably keep it on anyways, but I would recommend you just go ahead and keep that on. All right, let me switch over to the screen. Hey, what's up, guys? So we're going to go, this is eSignal. And what we're going to do is right-click on the chart, and you just want to go to Insert Study. You're going to just come up here and start to type in pivot. PIV should pull it up. I think you can go, okay, they changed the update, right? You have to go to built-in studies here, and then you click on pivot, and you click on apply, and it will actually apply the study to your chart. Now, I've already added it to my chart, so what I'm going to do is just come in here, right-click, go to Edit Chart, and you'll see right here, this is the pivot point. So this is how I have my settings for eSignal. You'll notice that the important things is the source. You want to make sure that it is H plus L plus C divided by 3, which is by default the calculations for that pivot point study. For the interval, you want to make sure you have it on day. They do have the option of week, month, quarter, year. Obviously, we're only going to be looking at the day. And just like any other indicator, guys, they only work if everyone else is looking at the same thing. So if you start highly customizing your indicators, then they're not going to work that well because only you are seeing the indicator the way that you customized it. So we want to try to use the default settings as much as possible on these indicators. So for that reason, I would not change, especially the way that it is calculated. Calculated based on daily bar. And this is also really important. I don't think you have this option in TC2000, but you do have the option in eSignal and Thinkorswim. But you want to make sure that you check to show only the current pivot. If I uncheck this, you'll see that it shows me the pivot and the S1, R2 levels, etc. for every single day in the past, and the chart just looks like a complete mess. Obviously, we're only really concerned about the current trading day, so we just check that. And that takes care of that. And then the rest is really just up to you. Just customize how it looks. So that's pretty much it for insert. It's pretty straightforward for inserting it on eSignal. And then finally for Thinkorswim, let's go to that platform here. So I have a chart with nothing on it. And what you're going to do is you're going to go up to the study button here. You click on that. And once again, you can just search for pivot, just start to type in PIV, and there it is right there. We can double click on pivot points, and we're going to click on the gear icon to customize it. And so this is where we really want to check this show only today. It's set by to no by default. We want to choose yes. And then this is where we can customize each of the different levels. So for some reason on Thinkorswim, the R3 level and the S3 level is not shown by default. So you need to make sure that you check on show plot, and you can come in here and change it to whatever colors you want. Go to R2. You'll notice that show plot is checked by default. So we'll just set all of our resistance levels to this red color. The pivot point itself will set to black, and then support, we're going to go with green. There's support 2 and support 3. This one, again, was the one that we need to make sure we check on show plot. So that's it right there. Click OK, apply, OK. All right, and that's it. So now you actually have, on Thinkorswim, you have the pivot point shown here. You have your R1, R2. Now, what's really strange, though, about Thinkorswim is it skips R3 and goes to R4, but it calls R4, R3. As if not to make it confusing enough for you guys. I don't know why they do that. In eSignal, there would be a R3 level in between these, and for whatever reason, it's not. So unfortunately, like I said, that is one of the cons about this study, is that it's not equal across all of the platforms. So just keep that in mind, but for the most part, it still works really well. I mean, you can clearly see, the interactions If you go through various stocks, look at NVIDIA. Yeah, I see. You can see how the pivot point differs slightly here. Let me move this chart over, and we'll go to NVIDIA here just for an example. All right, so both looking at NVIDIA, and the pivot point Friday was 507.26 in eSignal. In Thinkorswim, it was 507.03. So about a quarter or so in discrepancy there. And then you have the R1 is 511.37, it looks like, in eSignal, and it's 511.41 in Thinkorswim, so it's a lot closer. Then Thinkorswim's R2 is at 518.68. eSignal is 518.61. And then you have R3 in eSignal at 523.21. But in Thinkorswim, you don't have anything again until the last one at 530.33. And that's closer to the R4 in eSignal. So you can clearly, and let me just do this. Sorry, I should have done this first, guys, just to make it cleaner. Just turn off all of these studies. So we're only focusing on the pivot point. All right, so there you go, right? So you can clearly see the differences between the two platforms, between Thinkorswim and eSignal. Like I said, unfortunately, I don't have TC2000 installed. If someone wants to post in chat or something, if you do have that, what your levels are, and viewers watching later can always go back and kind of compare. But like I said, I mean, for the most part, they're relatively close, but there are some discrepancies, and that's definitely a con. Unfortunately, I hate that, but that kind of is what it is. So let me just check in with the chat. Do you guys have any questions at all about the pivot point study or anything that I covered, anything related to trading, whatever you might have questions over? I'm happy to answer. Okay, sorry, Dollar Bill. So yeah, you were asking about the previous low on Roku that we talked about a little bit earlier. It is not part of the pivot point study. So let me go back to eSignal here. So like I said, I should have done this earlier. I apologize. But as you can see, the only indicator that I have open on my eSignal chart right now is the pivot point study. We see the pivot point right here and our resistance levels above, support levels below. There is a study, if you go to edit chart again, in eSignal called OHLC. And what that does is it will display your previous high, your previous low. If you want, it'll show you your previous close, your previous open, and then it'll show you the current day's close, low, high, and open. So what's really nice about that, usually I just look at the previous high and previous low. So let me turn off the pivot point now, and there you go. So it is marking out the previous day's low and the previous day's high automatically for me. So I don't have to go through every single morning and mark those out on all the stocks that we like to trade. I got so sick of doing that. So Thinkorswim does offer something similar to that. And let me just show you real quick where that is. So in Thinkorswim, if you go to studies, and I believe you start typing in daily. Yeah, you're looking for daily high low right there. So double click on that, go to settings, and right there it's going to show you the previous day's high and the previous day's low. It'll automatically mark it for you. So let's just make that purple, that one's orange, and then we'll show only the last period to yes, okay, okay. And there you go. So similar result on Thinkorswim. There's your previous day's low and your previous day's high. So it is separate from the pivot point study, but it is definitely a very useful indicator. I don't know if it's really necessarily an indicator. It's just simply marking the previous day's high and low. So it's just basically marking support and resistance automatically for you. That's it. Okay, so let's see. Tastyworks is 5 primary, S1, S2. Okay, good to know. Do I ever use Camarilla pivot points? So I read into that a little bit when you posted that in the chat, and no, I've had actually never heard of them before. It's intriguing because I do sometimes use Fibonacci retracements, but I don't use fibs very much. It sounds like it's a little bit more complicated than your basic pivot point indicator. And again, we get into trying to keep things as simple as possible. And you have to ask yourself how many people are actually using that indicator. And I think one of the reasons that the pivot point indicator works so well on these large cap stocks that we trade is because of the fact that you do have a lot of institutions and algos trading them so heavily. They're going to use things like that are mathematically, make sense for price movements in a stock, right? Algos, obviously they're mathematically calculated how to trade stocks. And when you have a pivot point that essentially is giving you areas of support and resistance above and below that is calculated from the previous day's price action, it makes sense why they would work, not only from a human standpoint, but from a computer standpoint. So like I said, we know that we're trading with a bunch of algorithms and institutions and things in these large cap stocks, but they are programmed to trade essentially the same way as humans will, but better, right? They're programmed to take advantage of us. And that's why in large cap stocks, I always talk about giving it room, right? We can't, a lot of times in small cap stocks, we can't keep these like ridiculous, 3-cent stops, because you're going to get stopped out every single time, because the algorithms know exactly where a retail trader is going to put their stop, and they're going to drop it just below enough to stop you out. They're going to take back your shares from you for a cheaper price and laugh all the way to the bank, right? So you just kind of have to think about not only the emotions of humans and how they trade stocks, but how institutions and algorithms are going to take advantage of those emotions of inexperienced retail traders like us. NVIDIA had the pivot 507.28 R1, 511.90 R2, 518.62 R3. Am I still? Yeah. Let me put the pivot point study back on my charts. All right, there we go. So you're using TC2000. Yeah, okay. Appreciate that. So if you're watching the video after the fact, yeah, check out the live chat. Long Shorty posted in here, yeah, all the different levels. So it's a little different. R3 is 489.22. Is that right? That must be a typo. I have R3 522.21. Oh, sorry, S. Sorry, I had it backwards. Okay, so R1 was 507.28. So it's off by, a few points for sure. 511.87, and then you have R2 511.90. Yeah, it's 511.90 was R2. Oh, the pivot point. Sorry. Okay. It's hard to read this chat. Everything's kind of bunched together. Got it. Okay. 507.28 is the pivot point. So within 2 cents. Perfect. Okay. That's perfectly acceptable. The previous day's low and high study is not available on TC2000. That was one of my big caveats about TC2000. I hated that it wasn't available. So when I was using TC2000, like I said, part of my morning routine was to pull up all the stocks that we trade, Apple, Facebook, etc., and go through and literally manually mark out that previous day's low and the previous day's high. I hated doing it. I hate it. It's probably a little bit lazy on my part, but the less time that I can spend in front of the screens doing kind of mundane tasks that it's not benefiting me at all, the better off I'll be. Time management. Time is your most precious asset. So the better you can manage your time, the better off you'll be. So yeah, it's pretty close. There was some instances where there was quite a big discrepancy between what I was seeing on eSignal and what you were seeing on TC2000. And again, I don't know if that had anything to do with pre-market and after-hours data being turned off. Maybe try that. but it's good to hear that it's at least very, very close, within a few pennies. So that's good. So for the most part, on Lightspeed and other platforms, pivots work regardless if off on one platform or other. Yeah, I mean, they work. Yeah, they're going to be relatively close enough. I mean, like I said, with these large cap stocks, it's not uncommon for them to overshoot. You can see on NVIDIA here, right? It overshot R1. It overshot, came down, and then held it, and then ripped right through R2. It overshot R3. It didn't stop like right at it. So of course it's within a close enough margin of error that the pivot points will be useful on any platform you use. We're not trying to get these things down to literally the penny. These are $500 stocks, so it shouldn't be that big of a problem. But yeah, definitely. Yeah, Friday was a bit of a chop fest on a lot of these stocks. You can just look at Apple, right? If we just keep it very, very simple, what did Apple do, right? It's trading up and over the pivot point all day long. There's nothing there, right? There's no clear direction there. Similar to the VWAP, when we see something trading just like up and over the VWAP, it's not even respecting it at all. That's another point that I would make. When you see a stock that has a very clear trend up or down, then you're going to put more weight in that pivot point being, creating some type of reaction whenever the price hits it. But when the stock is just chopping up and over the pivot point, then the pivot point at that point carries absolutely no weight. Right? There's just no weight. It's not respecting it at all. But if you have a clear move lower and then it retraces up into the pivot point, then it's going to have a lot more weight. It's going to carry a lot more weight. We can go through a couple of other stocks here. Let me just pull this up. We'll go to look at all the stocks on my list here, right? Here's AMD. Traded right down into the pivot, overshot it a little bit, right? And bounced off of the pivot perfectly. Let's go to Amazon. So Amazon tried to hold the pivot for like half the day and then finally failed and broke below it. So you can see the clear interactions with the pivot right there. Let's go to BA. BA, perfect. Clear interactions with the pivot, right? It's not, it's not perfect. It does overshoot, but you can clearly see how it is interacting. This is why I love the hourly chart, guys. It's a great macro view that just cleans everything up. Right? It's so much easier to see, this is obvious, right? Look at the interaction with the pivot point. It stands out. If you look at that on a 1 minute chart, it's like, it's up, it's down. It's so much cleaner when you look at a little bit more of a macro view. We'll just go through the list here real quick. Alibaba traded right up into R1, clear reaction, clear interaction with the R1 pivot. Okay, this is a good example of one of the cons that I talked about. So on Beyond, it had quite, well, it's not a great example actually, but it had a huge move after hours, right? And so look how wide the distance is between your pivot point and your S2, right? Here's your S2 down here, and here's your pivot point right there. That's a lot of distance between those two levels because of this massive expansion and range from the previous day. So of course, the way the pivot point is calculated, it's going to end up with very, very wide distances between those. So it's going to be a little bit trickier on a day like that. Or when you have a stock that has this massive gap up overnight, the pivot point is going to be way, way, way out of the picture. So it's pretty much going to be worthless for you to use at that point. So that is kind of a caveat or a con to this particular study. Take a look at Disney. Wicked below, but kept holding the pivot point, traded up and over R1. Go to Facebook. Facebook kind of chopped the same as Apple, but ultimately rejected the pivot and stayed underneath of it all day. Microsoft. Again, it's not perfect, but you can clearly see that with this big expansion in the range here on Microsoft from the previous day, you have this big distance between the pivot and S1, sorry, and then the big distance between S1 and S2. So it's really hard for the average true range of Microsoft to really interact with the pivot points whenever it basically put in a move the previous day that's way bigger than its average true range. MU, man, that's a stock that I don't hardly ever look at anymore, but opens up right over the pivot. First hourly candle trades right up into R1. Next two candles trade up into R2. So, it works great, like I said, as a roadmap, as an idea of where your measured potential on a trade could go. And you start looking at these R1, R2, or S1 and S2 levels as potential targets on trades, not just as a trigger to enter a trade, but you can also use it, like I said, as a roadmap of kind of help you determine where's the stock likely to go, because there's so many you can go through here on this chart, and you can mark up, well, here, here's a level here, and here's a level here, and which one of these levels is it going to react with? We don't know, but the pivot point study can kind of help you in that regard. So let's go here. Just a couple more we'll take a look at. Here's Netflix. Nice rejection right there off the R1. So NVIDIA, I think we looked at NVIDIA. NVIDIA seems to really respect the pivot points. Some of these stocks will respect them more than others. Roku had a monster day this past Friday, basically dipped right into the pivot point off the open and then just ripped faces off. It went through R1 like it wasn't even there. It wasn't even until R2 that it even tried to stop, but even then it went halfway between R2 and R3. So, sometimes you get these just absolutely explosive moves. And again, this is getting more into always considering what the macro picture is. If you have a stock that's been consolidating for a very long period of time, then it has a more likely chance that the move is going to be absolutely explosive. Look at Roku. Look how long it's been just consolidating. It's just basically been trading sideways for such a long period of time. When you finally do get some expansion and range, the move has explosive potential. And so the result of that was basically what we saw, and that was just ripping right through those pivots like they're not there. So you always need to consider that macro picture, because if you have a macro picture like Roku, then it's not really a trade that I'd be looking at for potential reversal off the R2, because it's obviously going through a massive range expansion, and it's probably just going to sail right through it like it's not even there. So always consider that macro picture. There's obviously a lot of moving pieces that goes into trading, and that macro picture is very, very important for helping you determine how much emphasis to put onto any particular level on any day. Just a couple more. Let's see, Square. What did Square do? I didn't even look at Square. Traded up into R1, failed. Tesla traded right up into R1, traded down to the pivot, and really tried to hold it, but closed underneath the pivot. So that's kind of interesting. Twitter, it traded from the pivot to R1. And lastly, look at Zoom. Yeah, just basically from pivot to R1. That's it. So you get the idea, but yeah. Let me just check your questions again. Where will Apple's pivot points be on Monday? Will they be adjusted, or will they be based off Friday's price? They will be adjusted. I don't know where they'll be on Monday, because unfortunately, that is kind of a caveat to eSignal, and I think TC2000 as well. The pivot points won't actually be updated until the market opens. So I kind of hate that, because when I'm doing my kind of, my charting and pre-market, trying to make up a trade plan on the day. So it'll be showing me the pivot points from the previous day. So it won't be literally until 9:30 when the bell rings that the charts update with the current day's pivot points and R1, R2, etc. levels. So I don't know, but Thinkorswim, I believe, does show you the next day's pivots. Let me see if I drag this over. Yes. All right. So for example, here on NVIDIA, it is calculating the next day's pivot point to be at 518.21. So it's like, I wish we could have the best of all three platforms into one platform. There's things I love about TC2000. I love about, not a whole lot I love about Thinkorswim, but there are things I love about it, and then things I love about eSignal. So unfortunately, there's no like perfect solution. But yes, Thinkorswim does show you the next day's pivots. So if we go to Apple, it's not, so Thinkorswim has already adjusted the price for Apple. So it shows the next day's pivot to be pretty much the same as the previous days because there was no range. I mean, Apple just chopped sideways all day. So the pivot is pretty much the same. It's 125.50. And then you've got your R1, R2, R3, S1, S2, and S3. So there it is. Yeah, no, they'll update it. It'll be updated. Just like I said for eSignal, obviously it's not going to be updated until tomorrow. So if you guys have any last questions, I'll be happy to address those. But we're looking at a little over an hour on the webinar. That's kind of what I was shooting for. Hopefully it was helpful for you guys. I tried to make it as simple as possible. It's my first webinar, so I appreciate it if you guys hit that like button for me. Hopefully get some more people watching these and helps other people out. But yeah, I mean, the pivot point is definitely a very powerful indicator. It's one that I put a lot of emphasis into, but I don't put all of my weight into any one indicator, if you will. Basically, you want to see, for the highest conviction of trades, you want to see a confluence of support. So if you see something like we saw in some examples that which one was it? I think it was, let me pull it up real quick because it did happen really quickly. Let me just do this real quick before we go. Let's see. So in this video here, it was on Tesla, right? All right, so pause this video. So on Tesla, we talked about the fact that it traded right here into the pivot point. And then you also have rising support here on the hourly chart. And that rising support in this case is the 20 moving average on your hourly chart. And it's not uncommon, like I said, for these things to overshoot rising support. But when you have something that is lining up with other levels, you have a pivot point itself, you have a S1 or R1 level, for example, or S2, R2 level that's lining up with a confluence of other indicators or other daily levels of support and resistance, then that's just going to give you that much more conviction and that level actually having some type of reaction with the stock. No, none of the pivot points indicators on any of the platforms include pre-market data. They shouldn't because like we discussed, it is calculated from the previous day's high, low, and close. So it's calculated from the previous day's regular trading hours, not pre-market and not after hours data. It is calculated off of that daily bar, the high, low, close. So you might see these stocks interact with the pivot levels during pre-market. Let's go, which one was it? One of these stocks, I can't remember. I mean, it's not perfect, but you can clearly see that Boeing here in pre-market, it is, sorry, I'm on the wrong screen. Here we go. All right, so you can clearly see during pre-market that Boeing was interacting with the pivot point, right? But that pivot point itself was calculated from the previous day's daily candle, the previous day's high, low, and close. Go to your daily chart, and there it is, right? That daily candle right there, that is what it's being calculated off of. Yeah, no problem, guys. Well, like I said, I'm always available in the Discord if you have any further questions. And, once again, I really appreciate you guys watching. Hopefully it was helpful. And look forward to doing another one with you probably here soon. So let me know if you have any ideas of future webinars that you'd like to see. And I'd be happy to look into doing that. You've noticed that TC2000 sometimes one of their daily charts uses misprint. Yeah, I've seen TC2000 has sometimes quite a few misprints, so it could be a problem with that platform itself. But traditionally, they should not be calculated off of anything to do with pre-market or after hours data. So All right, guys. Thanks a lot. Take care, and I will catch you in the next one. See ya.